I would say one is not having a software specifically or a way to manage the capital raising process. So that's one thing to ensure that you're able to have everything in one place versus going to multiple avenues to be able, let's say, MailChimp, and then you've got Zoho over here, and then you've got another software. If you have everything in one house, that allows you to streamline things and be that much more efficient. And then the second one is not raising enough capital up front to take care of whatever the necessary capital improvements are. And then you run out of cash, and now you have to go back to your investors, which is a huge no-no. I haven't ran into that, but I heard that could be a nightmare.
Yeah, for sure. So let's talk about those just a little bit. Not having a way to manage the capital raising process. So how do you do that?
Yeah, so we ended up just what do you call that? Building our own software from scratch. Has a built-in CRM. It has the back end so the investor can track their investments. Because that's another thing that we've seen now is they're starting to be, investors are wanting to be more knowledgeable in terms of the status of their investments, and they want to be able to log in and see how things are progressing. So that's one thing. And so, yeah, we built that from basically from scratch, and then being able to have investors come to your site and then also invest in a specific opportunity that you have. So we built that all from in-house, and then ultimately that's one thing that is our back office is basically taken care of, so we can focus more on the acquisition side of deals.
That's really interesting. So investors can log in and they can see how their investment is doing. What's it going to tell them?
Yeah, so it's going to tell them whether you're doing monthly or quarterly or maybe even annually disbursements. So it's going to track the history on, okay, they invested, let's say $100,000 and they've earned annually $10,000. So they have a cash on cash return of 10%. So they'll be able to track that over the duration. And then also when you cash out or sell the property, and then you provide those distribution returns to them, they can see that on their dashboard as well. So they have that whole overall investor experience, which ultimately leads to retention. And then they keep coming back to you and investing.
So I can see that being able to answer many of their questions before you ever have to have that conversation with them.
Exactly.
So it's going to save you time there. And then also just them being more educated about what's going on.
Yeah, investors are definitely becoming more sophisticated, and now we're in what I would say the information age. So the more information you can provide to them, the better.
Nice. And so before you created the software, what was the system, that you had? Tell us, if somebody's just getting started, how do they track all that?
Yeah, so you can use spreadsheets. That's what we were formerly using beforehand. I would say we were looking at ultimately all kinds of softwares to avoid the spreadsheet here, and then we had the MailChimp here, and then we had the MailChimp to take care of our email campaigns. So that's one route. If you want to have everything and be old school, you can do everything offline, which is completely fine. So spreadsheets is good. Google Docs and Google Drive will be very powerful.
Nice. So you mentioned another way people fail is not raising enough capital for the capital improvements. And so what's a good rule of thumb for us going forward as far as how much capital do we need to raise?
Yeah, so a great thing is to have, when you're going through the due diligence period, to have a line by line list of improvements that need to be, or specific renovations that need to be completed to the specific property. So have a contractor go with you, walk all the units, or also perform and provide bids, whether that is a roofer, a HVAC guy. So ensure that you have bids and a line item on what renovations need to be done. So you have that figure. And then on top of that, you want to also put a buffer of, let's say, 10 to 20% that you would raise additionally to take care of all those improvements.